Good afternoon, everyone. Welcome to Cash Flow Statement. So, today we are going to start with a small question. Please write down the question. Please write down the question in the notebook. Question is, what do you mean by the term? Question, write down. What do you mean by the term cash and cash equivalent as per AS3? What do you mean by the term cash and cash equivalent as per AS3? This question is from October 2020, MTP, 5 marks. What do you mean by cash and cash equivalent as per AS3? From the following information of XYZ Limited, calculate cash and cash equivalent as on 31st March 2019. Calculate cash and cash equivalent as on 31st March 2019. Right hand side rupees. So start writing. Cash balance with bank. 10,000. Cash balance with bank 10,000. Then write down fixed deposit. Fixed deposit created on 1/11/18 and maturing on 15 July 2019 75,000. Next, write down short-term investment in highly liquid sovereign debt mutual fund. Short-term investment in highly liquid sovereign debt mutual fund made on 1st March 2019. Important line is this one: having maturity period of less than 3 months. 1 lakh. Having maturity period of less than 3 months, 1 lakh. Fourth, bank balance in a foreign currency account in India. So bank balance, write down $1,000. Bank balance $1,000, and in bracket below write down conversion rate on the date of deposit. Rupees 69 per USD, comma, and rupees 70 per USD on 31st March 2019. One more, write down debenture purchased of rupees 10 lakhs of A Limited. Which are redeemable on 31st October 2019. Important is the date, 31st October 19, 90,000. 90,000. Last line write down shares of Alpha Limited. Shares of Alpha Limited on purchased on 1st January 2019. Purchased on 1st January 2019. Shares of Alpha Limited purchased on 1st January 2019. 60,000. 60,000. So remember we had done a similar question, but that time the amount was not written. This time the institute has given you the amount also. So let us quickly discuss which of these will be included in cash and cash equivalent, and then we'll do the calculation. I hope everybody has noted down the question. Cash balance with bank, the answer is yes. Here we have no problem, it is cash and cash equivalent. Fixed deposited, it was created on 1st November 18 and it will mature on 15 July 19. So calculate the number of months: November, December, January, February, March, April, May, June and 15 July. So it is 8.5 months. 8.5 months. It is not cash equivalent, because in case of cash equivalent it should be less than or equal to 3 months. It should be less than or equal to 3 months from the date of maturity. Short term investment in highly liquid mutual fund, this was made on 1st March 19, and here it is written having maturity period of less than 3 months. So this 1 lakh will be included in cash equivalent. Bank balance in foreign currency in India. So all bank balance in India or outside India will be considered, but this is given in dollar. So we will multiply by closing rate 1000 into 70, 70,000 rupees will be considered. Debenture purchased of rupees 10 lakh of A Limited, which are redeemable on 31st October. Which are redeemable on 31st October? The answer is no. Its maturity period is more than 3 months. And then shares do not have maturity date. Shares do not have any maturity date, and plus shares are risky also. Plus shares are risky also. Therefore, 60,000 investment in share cannot be called as cash equivalent. So what I will do, I will only consider following items: cash balance, short term investment in mutual fund, balance with foreign bank, and yes, these are the only 3 items which will form part of cash and cash equivalent. So Jan is right. One student gave the right answer. Other student did not give any answer. So student will write down the heading now. In the notebook, write down calculation of cash and cash equivalent. Calculation of cash and cash equivalent. Only 3 items will come. So write down there. Point number A. First write down cash balance with bank. Cash balance with bank. Write down 10,000. Then write down B. Short term investment in highly liquid. Short term investment in highly liquid debt mutual fund. This is a type of mutual fund which invest in government security. This is a type of mutual fund which invest in government security and maturity period is less than 3 months, so I can take it. And point number C is bank balance, bank balance in foreign currency account. So we will convert into rupees. $1,000 into 70 is 70,000 rupees. So you will write point number D. Therefore, cash and cash equivalent A plus B plus C. What is the answer? Anyone? What is the total of cash and cash equivalent? Please reply. Total of cash and cash equivalent 1,80,000. 1,80,000. So now write down one note. Following items are not cash equivalent. Following items are not cash equivalent. Under that, write down one. Fixed deposit. Fixed deposit rupees 75,000 because maturity period is less than, is more than, maturity period is more than 3 months. Maturity period is more than 3 months from the date of acquisition. Maturity period is more than 3 months from the date of acquisition. Then second point, write down debenture. Debentures rupees 90,000 because maturity period is more than 3 months from the date of acquisition. Third, write down. Investment in shares. Third, write down investment in shares are risky investments. Are risky investment and do not have any maturity date and do not have any maturity date and do not have any maturity date. So if you write the reason also, then you'll get full 5 marks. If you write the reason also, you'll get full 5 marks. So are you with me? Say yes. This answer is over. This answer is over. Come to your notes. In your notes, you will find cash flow statement format is given. Cash flow statement format. Pro forma means format. Paragraph number 15. Paragraph number 15. So I will show you the format of direct method and indirect method. And once we go through this, then we have to only solve problems and more problems. So student will look at the format. You will write at the top when you will solve the question cash flow statement. Then you will write for the year ended, whatever year ended date is given. This you will divide first into three parts. In the same sequence we will write. In the same sequence we will write cash flow from operating activities. Under cash flow from operating activities, you will write directly the inflows and outflows related to day operating activities. Example, these are examples. Cash receipt from customer, cash paid to suppliers and employees, cash generated from operation, less income tax paid. Income tax paid will be shown separately. Cash flow before extraordinary item. In case if you have any extraordinary cash flow, that means those which are not related to day operation, but you have received it. So you will write extraordinary cash flow separately, proceeds from earthquake disaster settlement, and therefore net cash flow from operating activities. Then point number B will be cash flow from investing activity. So here we will write items like purchase of fixed asset, sale of fixed asset, purchase of investment, sale of investment, interest received on investment, dividend received on investment, and then we'll take the total. This is called cash flow from investment activity. This was cash flow from operating activity, and then we have cash flow from financing activity. Proceed from issuance of share capital, proceed from long-term borrowing, repayment of long-term borrowing, interest paid, dividend paid. These are only examples. You can have many things more. And then net cash used in financing activity. After that, you will take the total. The total of A plus B plus C is called net decrease or increase in cash and cash equivalent. Okay, add opening cash and cash equivalent. Cash and cash equivalent at the beginning, opening balance. You will get cash and cash equivalent at the end of the period. So this is your final figure. And if closing balance sheet is given to you, this total should match with your closing balance sheet cash and cash equivalent. If it does not match, then something is wrong. This format is called direct method because the cash flow from operating activities are directly calculated from debtor, creditor, expense account. No adjustment is done. Then you have cash flow statement in direct method. Only this part is different. Only cash flow from operating activity presentation is different. Remember, the answer will be same whether you follow direct method or indirect method. But if institute asks you a certain method, you will have to follow that method only. Then we don't have a choice. So under indirect method, cash flow from operating activity, you start with net profit before taxation and extraordinary item. Net profit before taxation. You want to write net profit after taxation, you can write, and then you add back provision for taxation. Then you will make adjustment for three types of items: non cash items to be shown in other head, and third type of adjustment is called working capital adjustment. Is called working capital adjustment. So depreciation, foreign exchange loss, these are non-cash item. Interest income, dividend income, interest expense, these are required to be shown under other heads. After adjusting this, we'll get operating profit before working capital changes. And then you will write here working capital changes items. For example, increase in debtor, decrease in stock, decrease in creditor, and then you will get cash generated from operations. After getting cash generated from operations, you will write income tax paid. You will get cash flow before extraordinary item. If there is any extraordinary item, you will present separately. For example, proceed from earthquake disaster settlement, and then net cash flow from operating activity. Up to this only, direct method and indirect methods are different. Remaining is same. So I'm not explaining again. Presentation of investing activity, presentation of financing activity are same under direct as well as indirect method. Okay. So this is about direct and indirect method presentation. So I will give you a small question, very small question to solve in the classroom. So please write down, everybody, take out your notebook and write down one small question. Take out your notebook, write down this question. Prepare cash flow statement. Prepare cash flow statement as per AS3 of prepare cash flow statement as per AS3 of Messrs. Shubham Creative Limited, for the year ended, 31st March 19. Underline, for the year ended 31st March 19. For the year ended 31st March 19. Now write down right hand side rupees. Question is from your actual November 2019 exam for 5 marks. This is an exam question and it was given in March 2021 RTP. March 2021 RTP, sorry, MTP, not RTP, MTP, that is your model test paper or mock test paper for 4 marks. So what you have to calculate here, only cash flow from investing activity. Write down right hand side rupees. Point number A, machinery acquired by issue of shares at face value 2 lakh. Machinery acquired by issue of shares at face value 2 lakh. Point B, claim received for loss of machinery in earthquake. Claim received for loss of machinery in earthquake 55,000. 55,000. Claim received for loss of machinery in earthquake 55,000. Point C, write down. Unsecured loan given to associates. Unsecured loan given to associates 5 lakh. Unsecured loan given to associates 5 lakh. Point D, write down. Interest on loan. Interest on loan received from associate company. Interest on loan received from associate company. Point number E, write down. Point number E, pre-acquisition dividend received. Pre-acquisition dividend received. Pre-acquisition dividend received on investment made. Pre-acquisition dividend received on investment made. 52,600. Point F, write down. Debenture interest paid. Point F, write down. Debenture interest paid. Debenture interest paid. 1,45,200. 1,45,200. Point number G, write down. Term loan repaid. Term loan repaid. Term loan repaid will be 4,50,000. Term loan repaid will be 4,50,000. Point H, interest received on investment. Interest received on investment. Interest received on investment in bracket TDS of rupees 8,200 was deducted on the above interest. TDS of rupees 8,200 was deducted on the above interest. Was deducted on the above interest. 73,800. 73,800. Point number I, purchase debenture of X Limited on 1st December 2018. On 1st December 2018, which are redeemable. Which are redeemable within 3 months. Which are redeemable within 3 months. Underline. Which are redeemable within 3 months. Underline. Point number J. Point number J. Book value of plant and machinery sold. Book value of plant and machinery sold. In bracket loss incurred rupees 9,600. Loss incurred rupees 9,600 is 90,000. I will discuss one by one. First, let us write the question. Multiple processing will be harmful. Now, if you want to write the source of this question, this is November 2019 exam for 5 marks, repeated in March 2021 MTP for 4 marks. So now I am going to solve this question. The student will pay attention. These are exam question likely for your exam also. So our question is to find out cash flow from investing activities. It's a good question. Machine acquired by issue of share. So this is a non-cash transaction, non-cash item. Ignore. Claim received for loss of machinery in earthquake. This will come as extraordinary item. This will come in extraordinary item. Unsecured loan given to associate. Yes, this will come. Interest on loan received. Yes. Pre-acquisition dividend received will come in cash flow statement. Debenture interest paid will not come. This will be shown in financing activity. This was given to confuse you. If you got confused, institute purpose is served. Institute will have more cash inflow and student will have more cash outflow if you make mistake. Okay. Term loan repaid. Financing activity. Term loan repaid, financing activity. Interest received on investment, TDS of 8,200 was deducted on the above interest. So gross interest received, please add 73800 plus 8200. So gross interest received will be 82,000. So 82,000 will be interest received and 8,200 will be tax paid. So I will write separately interest received 82,000, tax on interest paid 8,200. Next is purchased of debenture on 1st December which are redeemable within 3 months. So it is cash equivalent, and because it is cash equivalent, it will not form part of investment activity. It will not form part of investment activity. So do not include this in investment activity because this is a cash and cash equivalent item. So purchase of cash and cash equivalent item will not be shown in investing activity, otherwise it will be double counting. Last one, book value. Book value 90,000. Loss incurred 9600. Book value, suppose book value is 90,000, to balance brought down and buy loss transferred to P&L account is 9,600. So my question is, what is the sale value? What is the sale value of this plant and machinery? Anybody? The book value means ledger balance 90,000, loss 9600. So at what amount this plant and machinery was sold by bank? By bank. Anybody? By bank 80,400. So this 80,400 will come in cash flow from investment activity. Actual inflow of cash or actual outflow of cash will be presented in cash flow statement. Is it right now? Any query on this? If you have no query, write down the answer. Yes, Moonrise is right. Thakur is right. Very good. Jain is right. Jitendra Balakrishna is right. Where were you, Jitendra Balakrishna? For so many days you were absent? Okay, no problem. Kirti is right. Write down the heading. First, write down the name of the company if it is given. Name of the company is Messrs. Shubham Creative Limited. Messrs. Shubham Creative Limited. Cash flow from investing activities for the year ended 31st March 2019. Right hand side two columns. Right hand side two columns. First, I will complete this statement and then I will give you notes also. Then I'll give you notes also for checking what is right, what is wrong, why something is not considered. First item, machinery acquired by issue of share, ignore. It won't come in cash flow statement. Claim received for loss of machinery in earthquake. Keep around 6 lines blank here. Keep 6 or 7 lines blank and then write down, after keeping 7 lines blank, claim received for loss of machinery. Keeping 7 or 8 lines blank, presentation is equally important. 55,000 in the inner column, positive number because it is received, and if it is outflow, write negative number. Next line is unsecured loan given to associate. Write down unsecured loan given to associate is an investment activity, but loan taken will be a financing activity. So this will come in outflow. In bracket indicates outflow. Then in the same place, second line, interest on, copy the same sentence, interest on loan received from associate company. From associate company, this will be inflow. This will be inflow 70,000. Then pre-acquisition dividend received. This will also come in investment activity. Pre-acquisition dividend received on investment. Dividend received out of pre-acquisition profit is also investment activity item. You have studied about this in accounting standard 13. Remember AS 13, investment accounting. If you receive dividend for the period before the shares were acquired, it is called pre-acquisition dividend. However, for cash flow statement purpose, it does not matter. For cash flow statement purpose, it is inflow. Inflow 50 to 600. Debenture interest paid will not come. Term loan repaid will not come. Then write down gross interest received. Gross interest received. So interest received, what I'll do, I will take first gross 73,800 plus 8,200. So that is 82,000 positive, and let's write down tax deducted at source on interest, same figure 8,200. Separate presentation of taxation. Separate presentation of taxation. Then we have purchase debenture of X Limited on 1st December 2018 which are redeemable within 3 months. So this is a cash equivalent item. Cash equivalent item will not be considered here. Then last line of the question is plant and machinery sold. Sale of plant and machinery. Sale of plant and machinery. In bracket write the calculation. 90,000 book value minus loss 9600, 80,400. So now you first draw a line, and this we will say cash flow from investment activities before extraordinary item. Before extraordinary item. So the student will take out his calculator and take the total of these 6 items. And take the total of these 6 items. So that will give me cash flow before extraordinary item. Okay. So please try and give me the total before extraordinary item. Good students are trying. Other students are only copying. Everybody should reply. Everybody. Okay. So I am getting 2,23,000. 2,23,200. Negative I am getting. 223,200 negative. And then you have claim received for loss of earthquake. Therefore, therefore, cash flow from cash flow from investing activities. Now you will take the net figure in the outer column plus 55,000. Kirti is right. 168,200 negative. 168,200 rupees negative is the final answer. 168,200 negative. 168,200 is the answer. Tanya is right. Chaurasia is right. Thakur is right. Okay, so write down notes. Following items are not considered. Following items are not considered in cash flow from investing activities. First, write down debenture interest paid. Debenture interest paid in bracket rupees 1,45,200 and term loan repaid. Term loan repaid in bracket. Term loan repaid in bracket rupees 4,50,000. Rupees 4,50,000 because these are financing activities. Because these are financing activities. Every time if you write a note, it is good for getting good marks, full marks. Second note, write down investment in debenture for short term in bracket less than 3 months will be treated as cash equivalent and hence will not be considered in investing activities and hence will not be considered in investing activities. Third note, write down machinery acquired by issue of shares machinery acquired by issue of share is a non-cash transaction hence not considered. hence not considered. Hence not considered. Machinery acquired by issue of share is a non-cash transaction and hence not considered. So this answer is over. This answer is over. Any query now? This way the student has to write the answer, write the notes. If you want to get full marks, write full, write in detail. You will also come in merit list if you try harder. Now we'll go to our notes again. Back to our notes. One more theory paragraph. Distinguish between cash flow statement and balance sheet. What we are doing today, cash flow statement. Balance sheet you already know. So this is a potential theory question for 4 marks. Okay. In our book, paragraph number 16, you will find it. Same table is printed in your book. Left side cash flow statement, right side balance sheet. First point of difference, cash flow statement ascertains the change in balance of cash in hand and balance of cash at bank between two dates. So in cash flow statement we will see how much cash and cash equivalent has changed between two dates. The two dates can be based on a year, the two dates can be based on quarterly figures or monthly figures or half yearly figures. Most of our questions are based on annual figures. Balance sheet summarizes the financial position of assets and liabilities on a given date. Balance sheet does not give you the change. It shows you the position of assets and liabilities on a given day. We get to know how much assets we have, what are our liabilities, what is our net worth. Point number 2, an important difference, it analyzes, cash flow statement analyzes the reason for the change in cash and cash balance. First point says it calculates change in cash balance. We also get to know how much cash flow is due to operating activity, how much cash flow is due to investing activity, and how much cash flow is due to financing activity. Whereas the balance sheet depicts assets and liabilities, whether current or non-current. Balance sheet gives you assets and liabilities on a given date, and as per schedule 3, it is bifurcated into current and non-current. Point number 3, cash flow statement shows the inflows and outflows of cash. It is an important tool for short-term analysis. The two significant areas of analysis are cash generating efficiency and free cash flow. So cash flow statement tells you that how much cash flow has been generated by the entity during the year, how the cash has been utilized by the company during the year. It helps in more analysis. Users can take a more informed decision. But what balance sheet does? Balance sheet is not an analytical tool. Balance sheet is simply a summary of assets and liabilities on a given date. So this is one theory question. Now today our topic will be cash flow statement under indirect method. Indirect method means you will have to start from the profit figure. You have to start from the profit figure and move towards the cash flow and moves toward the cash flow, right? There are some questions. There are three types of problem in the exam. One, the question can be solved, which can be solved only under indirect method. Only under indirect method. There are some questions which can be solved only under indirect method, because the data is given in such a manner you can't apply direct method. Second, which can be solved, which can be solved only under direct method. There are some question which you can solve only under direct method. So when it is very clear that this question can be solved only under direct method or only under indirect method, we'll follow that. But hold your breath. Some question can be solved by both the method, which can be solved by both methods. The data is sufficient. The data is sufficient to apply both the methods. In that case, what the student will do? The student will check which method is given in the question. If the question says direct method, you will follow direct method. If the question says indirect method, you will follow indirect method. Now the student will ask me, suppose I get a question which can be solved by both the methods, and the question is silent about the method to be used. In that case, the student will have to write the assumption. In that case, the student will have to write the assumption and accordingly either apply direct method or indirect method. So it is really difficult to say which method you should apply when the problem is silent and the question can be solved by applying both the methods. So write an assumption and solve. So now, dear student, please come to question number 007. Question number 7 in your book. You will find it in your book. Okay. So please come to question number 7. This is the question, just check. Question number 7. From the following balance, you are required to calculate cash generated from operations. Only you have to find out how much cash is generated from operating activity. Not a full question, only operating activity. And they have given you debtors balance. This is opening and this is closing balance. Okay. Now debtors, bills receivable, creditor, bills payable, outstanding expense, prepaid expense, accrued income, income received in advance. All these items given to you are working capital items. Opening and closing balances are given to you. And in the last line they have said, profit made during the year is 1,30,000. So this is my starting number. And then in this question, non-cash item is not given. Items relating to other heads are not given. So the only adjustment I have to make is the adjustment for working capital changes. Do you remember 4 things? Which 4 things you have to remember? Increase in current asset, decrease in cash flow, decrease in current asset, increase in cash flow, increase in current liability, increase in cash flow, and decrease in current liability. logic explained in the first lecture is decrease in cash flow. Four examples were dictated to understand this. So just keeping this in mind, we will solve the problem. So are you ready? Now just check, I have given you the blank format in your book also to save your time. Your time is very precious. I have given the format for this question in the book only. So is the format there in your book? Is the format there in your book? Say yes. Format is there. This is the problem for the beginner like you. Such questions are not asked in the exam. Even a BCom student can solve it. Okay? So your heading is in your book cash flow from operations. First, we will start with profit made during the year. Profit made during the year. Please write down. Format is drawn in your book. 1,30,000. Outer column. Now I will go line by line in the question and you will help me. Question says first item debtors from 50,000 it has become 47. So it has decreased by 3,000. It has decreased. Now tell me, debtor is a current asset item. Decrease in current asset is increase in cash flow. So here you have decrease in debtor in the notes. You write decrease in debtor, increase in cash flow. Positive 3,000. Positive 3,000. Next line is bills receivable. You see bills receivable from 10 it has become 12,500. So there is an increase in bills receivable. But increase in bills receivable will lead to decrease in cash flow. So where is bills receivable? Here. Increase in bills receivable, decrease in cash flow. 2,500 in bracket. Third item, creditor. You see creditor from 20 it has become 25. So increase in creditor 5,000. Increase in creditor, increase in cash flow. Increase in creditor here, increase in cash flow 5,000. Very easy question. Next is bills payable on the screen. Bills payable has reduced by 2,000. Decrease in current liability, decrease in cash flow. So decrease in current liability here, decrease in bills payable. In bracket write 2,000. And next item is outstanding expense. Let me check. Outstanding expense is increase. Increase in outstanding expense. Outstanding expense is a current liability item. So increase in current liability is an increase in cash flow. So we are here increase in outstanding expense by 200 rupees positive. Next is prepaid expense on the screen. Prepaid expense, there is a decrease of 100 rupees. Prepaid expense is a current asset item. Decrease in current asset, increase in cash flow. Decrease in current asset over here is an increase in cash flow, 100 rupees. Decrease in current asset, increase in cash flow. Explanation I have given. Next is accrued income. Accrued income increased by 150. Accrued income increased by 150. Accrued income is a current asset. Increase in current asset, decrease in cash flow. So we'll come to here, increase in accrued income is a decrease in cash flow 150 in bracket, and then last item on the screen, income received in advance. Income received in advance is a current liability. There's a decrease of 50. There's a decrease of 50. Decrease in current liability, decrease in cash flow. Here in the last line here, decrease in current liability is a decrease in cash flow. Now please tell me the total of this entire thing in the outer column. Student will take total from 3000 till 50 plus minus. Give me the total. Give me the total. Give me the total in the outer column so that I can complete the answer. 3600 positive. Therefore, in the last line, write down cash generated from operation 133,600. 133,600. Check the answer and tell me if this is right or not. Check the answer 133,600. Everybody, please check. 133,600 is the answer. Balakrishna is right. Any other answer? Total of the last column is 133,600. Chaurasia is right. So this answer is over. Any query on this? Any query on this? If you have no query, let us come to next question number 8. Next question number 8. Question number 8 also you will solve in book only. Wow. Today you are having a good time. Question number 8. Calculate cash flow from operation. Tanya is right. Profit made during 2024. Transfer to general reserve. Depreciation. Profit on sale of furniture. Loss on sale of machine. Preliminary expenses written off. Okay. So what I am going to do, I will first explain. I will start from 50,000, transfer to general reserve, add back. Transfer to general reserve, add back. Depreciation non-cash item, add back. Profit on sale of furniture, minus. Loss on sale of furniture, add back. Non-cash item. Preliminary expenses written off, add back. Preliminary expenses written off, add back. These are non-cash entries. So they will have to be either added or subtracted. Those which are debited to P&L account, add back. We are assuming that this 50,000 is after transfer to general reserve. This 50,000 is after transfer to general reserve. There is an assumption we are making 50,000 profit is after transferring to general reserve. Hence, general reserve will also be added back. The entry for this is P&L account debit to general reserve 10,000, which means your profit and loss got reduced by 10,000, but cash balance has not changed. By passing a journal entry, cash balance has not changed. So if you assume that 50,000 rupees is calculated after transfer to general reserve, add back general reserve. If you assume 50,000 is before transferring to general reserve, then do not add back. So we are assuming 50,000 rupees is after transfer to general reserve. After that, what they have given, same like previous question, these are all working capital items which I am going to write in working capital changes. Okay. So question is similar to the previous one. This is a very easy question. To save your time, we will solve in the book only. Format is drawn. The student can solve in the book only. So every day keep the book in front of you. Okay, don't sleep on the book. Book should be in front of you. So start. Dear students, please start. First you start with net profit. Net profit, write down here 50,000. Net profit 50,000. Then go according to the sequence of question. Transfer to general reserve 10,000. Depreciation as per the question 20,000. Profit on sale of furniture, it is written below. Somewhere below it is written profit on sale of furniture. This will be in bracket 5,000. Then loss on sale of machinery you will add back. Those non-cash items which are debited to P&L account will be added back. They will reduce the profit but not reduce the cash. Cash balance will be more than the profit balance. Therefore, they are added back if they are debited. And preliminary expenses 10,000. Preliminary expenses 10,000 add back. These 5 items, you take the total and write in the outer column 10 plus 20 plus 10 plus 10, 50 and 5 minus. So this is 45,000, I think. 45,000. This is called profit from operation. Profit from operation 95,000. Profit from operation 95,000. Now come to your question. There is another table. You can see dater. Opening 10,000, closing 15,000. So there is an increase in dater by 5,000. But increase in dater, dater is a current asset. Increase in dater, decrease in cash flow. So increase in dater is printed here. Write down 5,000 rupees negative. Increase in dater, decrease in cash flow. Bills receivable. Now bills receivable you see 7,000, 5,000. So there is a decrease in bills receivable. Decrease in bills receivable, increase in cash flow. So increase in cash flow here. How much was the difference? The difference was 2,000 rupees positive. Stock. See the stock 15,000 has become 18,000. So increase in stock is 3,000. But increase in stock will decrease your cash flow. So come below here in the last fifth line, write in bracket 3,000. Next item, prepaid expense. What happened? prepaid expense plus 1000. This is also current asset item. Same answer, increase in current asset, decrease in cash flow. Last fourth line below, increase in prepaid expense, decrease in cash flow, 1000 rupees. Next line, creditor. Creditor, there is a decrease in creditor 2000 rupees. Decrease in creditor, decrease in cash flow. Last second line, decrease in creditor, decrease in cash flow 2000. Then we have bills payable. On the screen, bills payable plus 10,000. Bills payable plus 10,000. Increase in bills payable, increase in cash flow. On the screen here, somewhere in the center, increase in bills payable plus 10,000, increase in cash flow. You can remove that plus sign. Okay, last item, outstanding expense. On the screen, outstanding expense from 3 to 4 is 1000. Increase in current liability. This is current liability item. Increase in current liability, increase in cash flow. So you have to add on the screen somewhere in the center, increase in outstanding expense 1000 positive. Now, dear student, what you do? Take the total of these items in the outer column. So, can you please guide me how much is the net total of this item? 2 plus 10, 12 plus 1, 13 minus 5, 8 minus 3, 5 minus 1, 4 minus 2, 2000. So, the answer is 2000 rupees positive. Therefore, cash flow from operation is 97,000. Therefore, cash flow from operation 97,000. This means this company is showing profit of 50,000 from operation, but actually the cash flow it has generated is 97,000. So that's a good sign. That shows the company is able to have more operating cash flow than the profit it is showing. One major reason for that is non-cash item, because non-cash items reduces the profit. Non-cash items reduces the profit, but non-cash items do not reduces cash flow. Hence, you can see the cash flow from operation is more than profit. 45,000 is due to non-cash item and 2000 rupees is due to working capital changes. So this way we are able to understand why there is a difference between profit figure and the cash flow figure. Write an assumption. Assumption, write down. In this answer, last you have some space, then write down assumption. Profit figure in bracket rupees 50,000. Profit figure rupees 50,000 is arrived at after transferring to general reserve. Is arrived at after transferring to general reserve. The net profit figure of rupees 50,000 given in the problem is arrived at after charging or after transferring to general reserve. Is arrived at after transferring to general reserve. Is it right now? Say yes. Have you completed? Have you completed? Please tell me, have you completed? So today I am going to dictate one more question to you. So please come to question number, or write down this question. Those who don't have this question in the book, and those who have, no need to write. J Limited. J Limited presents you the following information. J Limited presents you the following information for the year ended, for the year ended 31st March 2019. For the year ended 31st March 2019. For the year ended 31st March 2019. Right hand side rupees in lakhs. Right hand side rupees in lakhs. Quickly write down net profit before tax provision. Net profit before tax provision 36,000. Net profit before tax provision 36,000. Dividend paid. Dividend paid 10,202. Dividend paid 10,202. Income tax paid. Income tax paid 5,100. Income tax paid 5,100. Book value of assets sold. Book value of assets sold 222. Book value of assets sold 222. Loss on sale of asset. Loss on sale of asset 48. Loss on sale of asset 48. Point number 5. Depreciation debited to P&L account. Depreciation debited to P&L account. Depreciation debited to P&L account 24,000. Capital grant received. Point number 6. Capital grant received amortized to P&L account. Amortized to P&L account 10. Amortized to P&L account 10. Point number 7. Book value of investment sold. Book value of investment sold. Book value of investment sold 33,318. 33,318. Quickly write down. Profit on sale of investment. Profit on sale of investment 120. Quickly write down. Profit on sale of investment 120. Then point number 8. Interest income from investment. Interest income from investment credited to P&L account. Credited to P&L account 3,000. Interest income credited to P&L account 3,000. Next, write down interest expenditure debited to P&L account interest expenditure debited to P&L account 12,000, 12,000. Interest actually paid, interest actually paid 13,042. Interest actually paid. Financing activity 13,042. Point number 11. Quickly write down increase in working capital. Increase in working capital excluding cash and bank balance. Excluding cash and bank balance 67,290. 67,290. Point number 12. Purchase of fixed asset. Quickly write down. Purchase of fixed asset 22,092. Point number 13. Expenditure on construction work. Expenditure on construction work 41688. 41688. Point number 14. Quickly write down grant received for capital project. Grant received for capital project. Actual grant received is 18. Grant received for capital project 18. Point number 15. Long term borrowing from bank. Long term borrowing from bank 55,866. 55,866. Point number 17. Provision for income tax debited to P&L account. Provision for income tax debited to P&L account 6,000. Provision for income tax debited to P&L account 6,000. Then last two lines, cash and bank balance on 1/4/18. Cash and bank balance on 1/4/18 6,000. Cash and bank balance on 1/4/18 6,000. Cash and bank balance on 31st March 19. On 31st March 19, closing balance 8,000. Closing balance 8,000. Then it says you are required to prepare cash flow statement. You are required to prepare cash flow statement as per AS3. You are required to prepare cash flow statement as per AS3. Now, please mark here, this question was asked in one of the MTPs, October 19 MTP for 12 marks. Can you believe that? It is a 12-mark question. Oh my God. It's a 12-mark question. So all of you please go through it again. Just go through this question again yourself and decide which item will go where. Decide which item will go where, which item you will write in operating activity, which item you will write in investing activity, and which item you will write in financing activity. Okay. Okay, so now I am going to explain to you and then we can solve the question easily. Right? It says net profit before taxation. Net profit before taxation. So here this profit is before taxation given to us. Start from there. dividend paid will go to financing activity, income tax paid operating activity in bracket, and then understand these 2 points. Book value of the asset sold is 222 minus loss 48. So that will give you net amount. So the net amount will be 174 and you will put it in investing activity. You will put it in investing activity. Now you are given depreciation debited to P&L account. This you have to add back in profit figure. Non-cash item. Why you will add back? It's a non-cash item debited to P&L account. Capital grant received amortized to P&L account. So this is, you remove it from here, minus from P&L account, and this, there is a note here. P&L account you have credited 10 only. So 10 will be removed from operating activity in adjustment, but actual grant received is 18 for capital project. The grant received for capital project is shown in financing activity. So take a pencil and you link these two numbers. 10 and 18 are linked. 10 I will adjust in operating activity. 18 will be inflow in financing activity. Book value of investment sold 33318 and plus you have made profit here. If it is profit you will add. So your cash flow from sale of investment would be 33438. 33438. Then interest income from investment credited to P&L account minus and show in investment activity. Show in investment activity. Interest expenditure debited to P&L account. Add back. But in the next line it says interest actually paid. So this you will minus in financing activity. Interest debited to P&L account, add back. Interest actually paid, deduct in financing activity. Increase in working capital is a negative item in cash flow from operating activity. Purchase of fixed asset, negative item, investment activity. Expenditure on construction work, negative item on investment activity. Grant received for capital project, positive item, financing activity. Long term borrowing from bank, positive item, financing activity. And provision for income tax debited to P&L account. You link it with the first item. The first line says net profit before tax provision. If it is before tax provision, then do nothing, because while arriving at 36,000, we have not yet deducted the provision for taxation. So if we have not deducted, then don't add back. Is it right? When will you add back provision for taxation in the profit? Only when it is given profit after tax. But if it is given profit before tax, no need to add back provision for taxation. What is not deducted will not be added back also. Is it right? So this question, now they have not mentioned. Listen to me carefully. When you read this problem till the end, it is not mentioned whether this question is to be solved under direct method or whether this question is to be solved under indirect method. But if I look at this question, you cannot solve under direct method. You cannot solve this question under direct method. Why? Because for direct method, I need to find out collection from debtor, payment to creditor, payment of expenses. Now looking at this question, can you calculate the collection from debtor? Can you calculate the payment to creditors? Tell me. No, you can't. And therefore, this question can be solved only under indirect method, because the way the question is drafted, profit is given, non-cash items are given, working capital change is given, so which clearly indicates that this question can be solved only under indirect method. Okay, so we are going to solve this question under indirect method. So my dear students, first we'll have to draw the format. First we'll have to draw the format. So write down the format. You will first write down name of the company. Write in the notebook nicely. This is a 12 mark question. J Limited. Cash flow statement. For your understanding, write down indirect method. And then you will write down for the year ended 31st March 2019. For the year ended 31st March 2019. Right hand side, rupees in lakhs. Right hand side, rupees in lakhs. Then you draw two columns on the right side. First we'll draw the format. Serial number, particulars, rupees, rupees. Serial number, particulars, rupees and rupees. Format is important so that you can solve quickly. Without format we can't solve. First point A, your heading will be cash flow from operating activities. Don't use short forms. OA. Don't use OA. Write full. Otherwise, in the exam, the institute will play OA with you. Under that, write down first point number 1. Only format we are drawing. Net profit. In this question, before tax provision is given. Very important, underline the word before. And point number 2, write down adjustments. Point number 2, write down adjustments. Then in this question we have many adjustment. Keep about here 8 to 10 lines blank. 8 to 10 lines blank. Then point number 3, write down operating profit before working capital changes. Operating profit before working capital changes. Operating profit before working capital changes. Then point number 4. Point number 4, write down working capital changes. In this question, this is given to you directly. Otherwise, we'll have to calculate it. In this question, working capital changes is given. Point number 5, write down cash generated from operations. Cash generated from operation cash generated from operations. Point number 6, write down, less taxes paid, less taxes paid, less taxes paid. And point number 7, therefore, therefore, cash flow from operating activities. Therefore, cash flow from operating activities. This is only first activity. Indirect method takes extra time because of this presentation. So I will just revise. Next time you will have to draw the format yourself. Cash flow from operating activity. Under that first will be net profit. If it is given before taxation, take before taxation. If it is given after taxation, take after taxation. Point number 2, adjustment. So here you have to make a judgment how many lines will be required. So about 7, 8 lines, 10 lines are required usually. Point 3, operating profit before working capital changes. Point 4, working capital changes. In this question directly the figure is given to you. Point 5, cash generated from operation. Point 6, less tax paid. And last line of this is cash flow from operating activities. Below that, the student will continue. The student will continue. Point number B, you will write down cash flow from investing activities. Cash flow from investing activities. Keep here about 7, 8 lines blank. Point number C, cash flow from financing activities. Keep here 7, 8 lines blank. Point number D, net increase or decrease in cash and cash equivalent. Net increase or decrease in cash and cash equivalent. A plus B plus C. Point number E, cash and cash equivalent at the beginning. And point number F, cash and cash equivalent at the end. At the end. And it should tally automatically. It should tally automatically. Then you have solved it correctly. If it doesn't tally, something is wrong. So please, dear student, draw the format. If you draw the format, I can solve. Today you will practice more and more such questions. Please practice all questions that we have completed today or will complete till the end of the day today. And you will also practice additional question from study material and other sources. Is it right? Then only you will become perfect in this chapter. This is a lengthy chapter because it has lot of questions. Large varieties of questions are there. Variety unlimited. Okay. So we will start now. Is everybody ready? Is everybody ready? Say yes, we have drawn the format. Tell me yes or no. Done? Done. All of you have done. So the question begins with net profit before tax provision. So write down here 36,000. Net profit before tax provision. Write down 36,000. Then dividend paid. Dividend paid is a financing activity. Point number C. Dividend paid. Everything in first column. 10,202 in bracket. 10,202 in bracket. Then income tax paid will come to cash flow from operating activity. In the last point number 6, less tax paid is written here. Right in the first column, income tax paid in bracket 5,100. Chetan says, I am ready. We are also ready, Chetan. Next line. Point 4, book value of the asset sold 222 less loss on sale of asset 48. So come to point number B, investing activity. If you have missed anything, tell me. I will repeat. Under that write 1, cash flow from investing activity, write down sale of asset. Sale of asset. Sale of asset is cash flow. So when the book value is 222 and the loss is 48, so actual cash inflow is 174. Actual cash inflow is 174, and this loss on sale of asset is a non-cash item debited to P&L account. So I will go to adjustments. And in adjustment I will write down here in adjustment small a, add loss on sale of asset. Why we are adding back? It's a non-cash item. The actual cash flow is the sale value. Actual cash flow is the sale value. Loss is a book entry. So that amount is 48, right in the first column. Then in the same question number, point number 5, depreciation. Depreciation, this 5 depreciation, this also write down here in adjustment number B, add depreciation. Why non-cash item? Why depreciation in bracket non-cash item 24,000? Please follow me. Then capital grant received amortized to P&L account. So it is to be shown in financing activity. This item is grant received from the government for capital project. You have studied in AS12 government grant, okay, that such grant are financing in nature. So it should be shown in financing activity. Remove from here and show in financing activity actual grant received. So I will write here point number C, less. Point number C, write down capital grant received, capital grant amortized, capital grant amortized to P&L account. You will write in bracket because it was credited to P&L account 10. And the second effect of that will be in financing activity. On the screen, cash flow from financing activity, right here, capital grant received. capital grant received for capital projects. Now here I am going to write the actual cash flow. Here I am going to write the actual cash flow which is given in point number 14. Go to point number 14 below in your question. You will find an amount 18 is written here. In point number 14, actual grant received is 18. So I will write 18. Come back to point number 7. Point number 7 is book value of investment sold 33,318 and profit made is 120. So first you will come to cash flow from investing activity. In cash flow from investing activity, we will write sale of investment. Sale of investment will be 33,318 plus 120. So that is 33,438 positive. But what about this profit on sale of investment? Profit on sale of investment is credited to P&L account. It's a non-cash item credited to P&L account. So profit will go up, but cash flow will not change. So we are going to write in adjustment point number A2 under that D less profit on sale of investment. Profit is credited to P&L account. If a non-cash item is credited to P&L account, I will deduct it. So the amount was 120. Non-cash item credited to P&L account in adjustment less. Point number 7, 8. Point number 8 is interest income from investment credited to P&L account. So again come to adjustment on the screen. What is this adjustment? It has to be shown in investment activity, but right now it is included in profit figure. So remove from profit and show in investing activity. So write down here minus. Minus. Very good question. Interest income. Interest income. Why we are removing it from here? Those who want to write to be shown in investing activities. So actually it should go to investing activity. So remove it from here in bracket 3000. In bracket 3000. And then you go to investment activity. Write down there interest income. Interest income. Inflow 3000. Interest income 3000. Any query on this? Any query on this? Point number next. Interest expenditure debited to P&L account. Interest expenditure debited to P&L account. So what I will do? First I will remove it from cash flow from operating activity and show it in financing activity. So point number F right here, because it is an expenditure, it was debited to P&L account. If it is debited to P&L account, I will add back in operating activity and I will deduct it in financing activity. So write down interest expense. Why we are adjusting here? Those who want to write to be shown in financing activity. This is to be shown in financing activity. So how much interest expenditure is debited to P&L account? 12,000. Add positive. But if you read the next paragraph, next line, point number 10, If you say, look at point number 10 on the screen, this is point number 10. Actual interest paid is 13,042. So I am going to write 13,042 in financing activity. Point number C, financing activity. Here you will write interest paid. Interest paid is actual amount is 13042 in bracket. 13042 in bracket. Point number 11, increase in working capital. Point number 11 on the screen, increase in working capital excluding cash and bank balance. Cash and bank is shown separately. Remaining working capital has increased by 67290. So increase in working capital is an outflow. Increase in working capital is an outflow. So come to operating activity, point number 4. Working capital changes, write down increase. If the working capital will increase, cash flow will decrease. How will you invest in working capital? How will you buy stock? You will buy stock only if you invest cash. So therefore there is a cash outflow when working capital increases. When working capital increases, there is a cash outflow, and the answer is 67290 in bracket. Okay. Sometimes the student will ask this query, why increase in working capital is outflow? Let us say in working capital we have only stock. Stock is only an item of working capital. In the beginning stock was 100, at the end it is 200. It means we have purchased stock of 100 rupees. That is why my working capital has gone up. So working capital increase means outflow of cash. So this is in bracket 67290. Next point, number 12 in your book, purchase of fixed asset. That is very easy. Investing activity. Investing activity, write down purchase of fixed asset. Avoid writing short form. Avoid writing short form because then you develop that habit, and then in the exam you write in short form, they give you short form marks also. Point number 13, expenditure on construction work. Again investing activity. Again investment activity. Expenditure on construction. Expenditure on construction in bracket 41688. 41688. Grant received for capital project, already done. Already done. Long term borrowing from bank, point 15. Long term borrowing from bank. Financing activity. In financing activity, write down long term borrowing from bank. It is an inflow. It is an inflow. So write down there 55,866. 55,866. Now they are saying provision for income tax debited to P&L account. Don't do anything. Sir, why don't do anything? Because the profit given is profit before tax provision. Underline. Cash and bank balance on 1/4/18. So this will come in point number E. Cash and cash equivalent at the beginning. Beginning cash is 6,000 rupees. Right in the outer column. Beginning cash is 6,000 rupees. And cash equivalent at the end is 8,000 rupees. So our answer should finally tally automatically. Okay. So we have completed all the transactions given in the problem. Now time to use your calculator and help me. First you draw one line here and calculate operating profit before working capital changes. Take the total of all these numbers which I have highlighted just now. So this will give you operating profit before working capital changes. Take 36,000 plus 48 plus 24,000 minus 10 minus 120 minus 3,000 and plus 12,000. So this comes to 68918. 68918. 68918. 68918 minus working capital changes. Again draw one line here and write down in this heading cash generated from operation minus 67290. So 1628 is the cash generated from operation. But you have paid 5,100 rupees tax also minus 5100. So this will give me cash flow from operating activity in the outer column 3472 in bracket. Check. Cash flow from operating activity. This is the answer I am getting 3472. This only one figure of one activity will go to outer column. Only one figure, final figure of that activity will go to outer column. So if anybody wants to check any figure, can check it. 3472 negative. Chaurasia is right. Amazing Chaurasia. 3472 negative. No problem. Investing activity. Take the total in the outer column. Investing activity 174 plus 33438 plus 3000 minus 22092 and minus 41688. So again negative 27,168. No problem. Now take financing activity total. Anybody for financing activity total? So this is 32,640. Tanya is right. 32,640. So if you see the net increase, it is coming to 2,000. Take the total of operating, investing and financing activity. Take the total of operating, investing and financing activity and your net total will come to 2,000. Your net total will come to 2,000. Net total will come to 2,000. Is the answer telling now? 2,000 plus 6,000. 2,000 plus 6,000 is equal to 8,000. 2,000 plus 6,000 is equal to 8,000. So the answer should tally automatically. Tallied. Everybody is able to tally? Please tell me. Then we can go to the next question. Everybody is able to tally? Please tell me. Okay. So everybody is saying we are able to tally. So this answer is over. Write a note. Provision for income tax. is not adjusted because profit figure given is profit before tax provision, is profit before tax provision, is profit before tax provision, is profit before tax provision. So if you have this query, why we have not adjusted, it is before tax. If it was given net profit after provision for taxation, then you will add back, which will happen in some question. Both type of question we will solve. One where profit before provision for tax is given, like this one, and second where the profit after provision for taxation is given, then we'll add back. If you have any query, I'll be pleased to answer your query. Come on, everybody. Any query? Yes? Any query? No query. Okay, come back to your book. Now we'll solve question from your book. Question number 9. Please come to your book starting 6 or 7 pages or starting 11, 12 number pages. You will find this question number 9 there. Okay, you will find this question number 9 there. So you don't have to write the question this time. Check this question is there in your book. Now we'll take a little advanced version of the previous question. From the following balance sheet of AS Foundation Limited. Oh, wonderful. Your company, AS Foundation Limited. Prepare cash flow statement. Prepare cash flow statement. Balance sheet is given to you. Two balance sheets are given to you. This you write opening balance sheet, and this you write closing balance sheet, opening, closing. Now come to the liability side. Liability side, equity share capital. Look at these numbers carefully. Opening is 3 lakh, closing is 4 lakh. So what may have happened? Issue of share. What may have happened? Issue of share. Then in your book, 8% redeemable preference share capital. So actually the figures are like this. Opening is 1,50,000, closing is 1 lakh. In your book properly typed. So that will give you redemption, because opening is more, closing is less. So in case of preference share, seems like redemption. In case of equity share, seems like issue of share. Seems like issue of share. Then capital reserve, opening is 0, closing is 20,000. General reserve, opening is 40, closing is 50. So general reserve increase means it must be transfer from P&L account. So what we assume when general reserve increases, normally we will assume it is transfer from P&L account. P&L account balance, opening 30, closing 48. The difference of opening and closing represents profit for the year. closing profit is more than opening profit, means it represents profit for the year. It represents profit for the year. Sundry creditor, bills payable, liability for expenses. These three items are working capital changes item. These three items are working capital changes item. Then we have provision for taxation. Provision for taxation. Opening is 40, closing is 45. Some adjustment is printed below. Some adjustment is printed below. We'll check that. Then proposed dividend, opening is 42, closing is 50. So this I will explain in a minute. Opening and closing I will explain. This requires some explanation. Question pending. Look at goodwill. Goodwill opening is 1 lakh, closing is 80. So goodwill 20,000 has been written off in P&L account. Since it is written off in P&L account, it is a non-cash item. It is a non-cash item. You will add back in profit. Then you have land and building, plant, investment, this debtor stock and bills receivable. This will again come in working capital changes. Cash in hand, cash at bank will come in cash and cash equivalent. And preliminary expense, opening is 15, closing is 10. So 5,000 rupees is written off in P&L account. So in adjustment you have to add it. In adjustment we'll add back preliminary expenses written off 5,000 rupees. Okay. So this is the balance sheet. Now in below the balance sheet there are 5 adjustments also given. So question can come in this format also. Opening, closing balance sheet will be given and certain adjustments are given below the balance sheet as to what happened during the year. A piece of land has been sold out in 2010-11. That is why you will see your value of the land closing figure is less than opening figure, and the problem says and the profit on sale has been credited to capital reserve. So understand the journal entry, what entry they have passed. What entry they have passed. Those who want to write down, for the first one, bank account debit to land account, you will see land is reduced by 30,000, and to capital reserve, you will see capital reserve is credited by 20,000. So book value of the land sold 30,000, profit is 20,000. So amount received, please tell me, amount received by selling this land is how much? Similar question was there in previous problem also. 2 lakh minus 1 lakh 70,000 indicate 30,000 is the reduction in the value of that land and building. Profit is 20,000. So the amount realized on sale is 50,000. Amount realized on sale is 50,000. Bank account debit 50,000. To land account 30,000. To capital reserve 20,000. Now the student will ask why they have credited to capital reserve. Now this we cannot do anything. Whatever they have done, we just have to analyze it. We are not passing the entry. Entry has already been passed. So we have to only see what effect they have given. So the sale value of the land, 50,000 rupees will be transferred to cash flow from investing activity, CFIA. This we will transfer to cash flow from investing activity. Point number 2, a machine has been sold for rupees 10,000. The WDV of the machine was 12,000. Sale value 10,000. WDV 12,000. So what is the loss? The loss is 2,000 rupees. The loss is 2,000 rupees. Depreciation of rupees 10,000 is charged in plant account in 2010-11. So I am going to write the journal entry for point number 2. Interested candidate can note down bank account, 2 entries will be required. Bank account debit 10,000, loss on sale 2,000. 2, plant account 12,000. And second entry is for depreciation. Depreciation account debit 10,000 to 10,000. After passing these 2 entries also, if the plant account is not tallying, we'll prepare one plant account later. The plant account is not tallying, that will indicate either purchase or sale of some plant. Okay. So this is the entry for point number 2. And plant account, it seems, will not tally because closing balance is very high. So some purchase of plant has happened during the year. To find out the purchase of plant during the year, we will prepare one plant account. Point number 3. Interested student will write down the entries which I am writing for explanation purpose. Point number 3, rupees 3,000 by way of dividend is received. Dividend received 3,000, including rupees 1,000 from pre-acquisition profit, which has been credited to investment account, So what this company has done, it has received a dividend of 3,000 rupees. Bank account debit 3,000. Dividend out of pre-acquisition profit was 1,000. AS 13 is applicable here. Refer AS 13, we have solved 2 or 3 questions also. Investment accounting. Dividend received out of pre-acquisition profit should be credited to investment account, which they have done, and to P&L account 2,000. Remaining 2,000 they have credited to P&L account. So what we are going to do, total dividend income 3,000 will be shown in investment activity. Investment account we are going to prepare, and you are going to write on the credit side of investment account 1,000. P&L account is credited by 2,000. Dividend income credited to P&L account, you deduct it from P&L account because it is not an operating activity, it is an investment activity. So deduct in P&L account and show in investment activity 3,000 rupees. So this will be the treatment. 1,000 you credit to investment account, 2,000 was credited to P&L account. In cash flow statement, 3,000 will be shown in investment activity. Investment account credit side write 1,000, and from P&L account remove 2,000 because it is an investment activity item. Point number 4, an interim dividend of 20,000 and tax on such dividend at the rate of 10% has been paid in 2010-11. What is interim dividend? Interim dividend is dividend paid during the year. During the year. For example, this is my financial year 2000, say 21-22. If dividend is paid in the middle, somewhere around 30th September, dividend is paid, then we call it interim dividend. It has been paid and tax is also paid. So listen to me, there will be two entries for this. First entry will be P&L account debit. We have to create a liability to interim dividend payable 20,000 and to tax payable on interim dividend 10% of 20,000. Please listen to me carefully. All this we have done earlier also. So total amount you need to debit, to the P&L account is 22,000. And then the second entry would be, you will have to make the payment. The entry for making payment will be interim dividend payable account debit, 20,000, tax payable debit 2,000, to bank 22,000. These are the entries company has already passed. You have learnt about it. In final accounts, company final account. So what is my adjustment? This I am debiting to P&L account. This have to be shown in financing activity. So you will add back in adjustment in operating activity, and payment of dividend will be shown in financing activity, including tax on dividend, because tax on dividend relates to dividend, which is a financing activity. Okay. Next point, number 5, income tax paid during the year. Actual tax paid will be deducted 35,000. Income tax paid during the year, this will be deducted in operating activity. Okay, so this is my question, very important question. So let us solve it together. And in this question, we would be required to prepare few working notes also to find out some missing figures or to understand better. So my dear student, please write down AS Foundation Limited. AS Foundation Limited. Cash flow statement in bracket indirect method. Cash flow statement in direct method. Cash flow statement in direct method for the year ended 31st March 2011. For the year ended 31st March 2011. After that you write down, cash flow from operating activities. Cash flow from operating activities. Point number one, net profit before adjustment. Net profit before adjustment. net profit before adjustment. Net profit before adjustment. Point number 2, adjustments. And under adjustment here, please keep 14 lines blank. You have many adjustment here. Keep 14 lines blank. Point number 3, write down. Point number 3, operating profit before working capital changes. Operating profit before working capital changes. Point number 3 is operating profit before working capital changes. This will be A plus 1 plus 2. This will be 1 plus 2. Point 1 and point 2. Point number 4, write down working capital changes. Point number 4, working capital changes. Keep here about 7 lines blank. Working capital changes 7 or 8 lines blank. Otherwise, you will not be able to write properly. Working capital changes, keep 8 lines blank. Then point number 5, cash generated from operations. Cash generated from operation. This will be point number 3 and point number 4. Cash generated from operation. Cash generated from operation. Point number 6, write income tax paid. Point number 6, write income tax paid. Point number 7, write down. Point number 7, net cash flow from operating activity. Point number 7, net cash flow from operating activities. Point number 7 is net cash flow from operating activities. After that, write down point number B. Point number B, cash flow from investing activities. Cash flow from investing activities. Keep 8 lines blank. Cash flow from financing activities. Keep 8 lines blank here. Cash flow from financing activities. Point number D, net increase or decrease in cash and cash equivalent. Net increase or decrease in cash and cash equivalent. Point number E, cash and cash equivalent at the beginning of the year. Cash and cash equivalent at the beginning of the year. 2 lines, 1 line blank. Then write down cash and cash equivalent. Last line, write down cash and cash equivalent at the end of the period. Cash and cash equivalent at the end of the period. cash and cash equivalent at the end of the period. This is the format. And what we'll do, in order to solve the question nicely, we'll prepare working notes also. Okay? So write down below the table working note 1. Start from asset side, we will require one land and building account. Those items which have adjustments, preferably draw a ledger, because with the help of ledger it is easy for us to understand. 6 lines blank, working note 1, land and building account. Working note 2, plant account. There is a sale of plant also. So there is some adjustment in plant account also. Keep 7 lines blank in plant account. Then you draw working note 3, investment account. Keep about 6 lines blank, because one entry has gone in investment account. One entry has gone in investment account. Then working note 4 write down. You have one small capital reserve account. One entry has gone in capital reserve account also. 5 lines blank. And working note 5 write down. Provision for taxation account. Working note 5, because one adjustment is in provision for taxation. Which ledger you will draw where you have some adjustment, where you think there may be some balancing figure. 5 or 6 lines. Kindly draw the 5 working notes. I think that will be sufficient. At any point of time, you are free to ask the question. At any point of time, you can ask question, but question should be related to cash flow statement. And right now, question number 9. Okay. If you ask other questions, we will not be able to reply right now in the running batch. Other queries can be sent on the mail. So please come to this question now. I am ready to start. Have you drawn the format? Please tell me. Have you drawn the format? Say yes. Say yes. So you see, in this question we have one opening balance sheet. Share capital 3 lakh versus 4 lakh. Nothing is given about equity share capital in the problem. If nothing is given about equity share capital in the problem and it has increased from 3 lakh to 4 lakh, what can we assume? We can assume issue of share. So come to cash flow from financing activity, point number C, and write here issue of equity shares. 4 lakh minus 1 lakh. 4 lakh minus 3 lakh. The answer is 1 lakh. The answer is 1 lakh. And then when you look at the preference share capital, from 1,50,000, it has gone to 1 lakh. So redemption has taken place. So write down in financing activity, redemption of preference shares in bracket 1,50,000 minus 1 lakh, and you will write 50,000 in bracket outflow. It is an outflow. Then we have capital reserve in the question. Capital reserve opening balance by balance brought down is nil, but it has a closing balance. Working note 4. Working note 4, by balance brought down dash to balance carried down. Just write down here 20,000. I will come back to this. We will not change the sequence. We'll go line by line, and then you don't miss anything. General reserve. General reserve was 40,000 at the beginning, and it has become 50,000. So what entry they have passed? They have passed this entry, P&L account debit to general reserve 10,000. P&L account balance got reduced for a non-cash transaction. So if P&L account balance is reduced for a non-cash transaction, what we will do? We will come to these adjustments. Point number A2, adjustment, and write here transfer to general reserve. Transfer to general reserve 10,000 positive, because P&L account was debited. Add back. Okay, add. If you want to put that add sign, add. Now the next line is P&L account. 30,000, 48,000. Opening is 30, closing is 48. So in the first line, net profit before adjustment, you write down 18,000, 48,000 minus opening 30,000. This 18,000 is after all the adjustments made in P&L account. Is after making all the adjustments in P&L account. So this is 18,000. Next item is sundry creditor. So student will now help me. Student will help me. He has to compare the opening and closing balance and tell me what happened to sundry creditor. So will you help me? Say yes, sir, we will help you. Sundry creditor opening balance is 29,200. Closing is 52,000. So 52,000 minus 29,200, 22,800. So come to point number 4 here. Working capital changes. Under that point, you write down increase in creditor. Increase in creditor, increase in cash flow, 22,800. Below that, bills payable, from 15,800 it has become 16,000. Same situation. Current liability has increased. Increase in bills payable is increase in cash flow. Positive number. Positive number. Liability for expenses. From 30,000 it has become 36,000. So you will again write increase in liability for expenses 6,000. Positive number, increase in current liability, increase in cash flow. Logic I had dictated to you. Okay. Every time we can't go back to logic, we can't complete the problem. Now liability for expenses we have done. Provision for taxation. There is a working note number 5 on the screen right side. Only write down opening and closing balance. Provision for taxation, opening balance 40,000 here on the credit side, and two balance carried down, closing balance 45,000. It is a liability. So liability item will have opening balance, buy balance brought down, and closing balance, two balance carried down in the last line. Up to provision for taxation, any query? If not, come to proposed dividend. Now what happens in case of proposed dividend? What happens in case of proposed dividend? Proposed dividend which is appearing in opening balance sheet must be paid, because you know under Companies Act, once the dividend is proposed, it has to be paid within 30 days. So dividend which is proposed on 31st March 10, it must have been paid. It must have been paid before 31st March 11. So we will always assume, if any other information is missing, we will assume the proposed dividend of the previous year has been paid, and current year, that is on 31st March 11, the company may have made a fresh provision for proposed dividend by passing an entry, P&L account debit to proposed dividend 50,000. So these are two transactions. In case of proposed dividend, we will assume last year proposed dividend, last year paid, and this year provision for proposed dividend made. Last year paid, this year made. Poem. What is the poem? Last year paid, this year made. Last year paid, this year made. So last year paid will go to financing activity, and this year provision made add back in the P&L account, because you have debited P&L account for a non-cash item. Actual payment we are showing separately in financing activity. So let us see what happens to proposed dividend. Last year paid, financing activity, write down proposed dividend for 31st March 2010 paid. Of course, it must have been paid. There is no point in argument. You can't keep proposed dividend for more than 30 days. You have to pay. And this year the provision was made, but it is a non-cash item. So in adjustment, write down add proposed dividend, in bracket write 31st March 2011, 50,000 positive, because you are adding 50,000. This completes my liability side items. Asset side, goodwill was 1 lakh. Goodwill is 80,000 at the end. So what we will assume in case of goodwill and preliminary expenses, that they have been written off in P&L account by passing the entry P&L account debit to goodwill account. Again non-cash item, debited to P&L account, add. So one more item, add goodwill written off in adjustment, positive number 20,000. If you want to write calculation, every time you can write the calculation, no harm. 1 lakh minus 80,000. Then we'll go to working note number 1, land and building account. Question should be in front of you. To balance brought down, opening balance 2 lakh, closing balance on the credit side last line. For asset, this is the presentation. Opening balance, to balance brought down, closing balance, last line by balance carried down. Sorry. 1,70,000. Plant account, to balance brought down, adjustment later. Adjustment later. Don't worry. I will do it. I will tally your cash flow statement. Then only we can go to next question. Don't worry. To balance brought down 80,000 and buy balance carried down. Buy balance carried down 2 lakh. Investment account also, to balance brought down 20,000 and buy balance carried down 30,000. We'll come back to these three accounts because there are some adjustments. Then the student will now come to cash flow from operating activity, working capital changes. In the center, working capital changes, and again keep your calculator ready. Sundry debtor balance was 1,40,000. Now it is 1,70,000. So you will write increase in debtors, working capital changes, increase in debtor. Increase in current asset is a decrease in cash flow. So you will write in bracket here 30,000. 1,70,000 minus 1,40,000. Then increase in stock is also there. Increase in stock. Closing stock is 1,09,000 minus opening stock 77,000. Increase in stock is a decrease in cash flow, negative effect on cash flow. Fourth item, bills receivable. From 20,000 it has become 30,000. Again write in the same place. Increase in bills receivable. Decrease in cash flow 10,000. 30,000 minus 20,000. So this is bills receivable done. Any query? If you have no query, come to the cash flow statement, point number E and F in the last two lines. Cash in hand, cash at bank, you add them together. 15,000 is cash in hand, 10,000 is cash at bank. Both are cash and cash equivalent. This you write in outer column 25,000. Closing 10,000 is your cash in hand, 8,000 is cash at bank. So closing cash and cash equivalent is 18,000. I hope you are writing. Write down slowly everything. Show the calculations. Last item in the balance sheet is preliminary expenses. From 15,000 it has become 10,000. It means 5,000 rupees written off. So again entry will be P&L account debit to preliminary expense written off, which means non-cash item debited to P&L account, add back. Add back preliminary expense in adjustment. Preliminary expense written off. Why we are adding back? Non-cash item. Non-cash item 5,000 rupees. Non-cash item 5,000 rupees. So this is my balance sheet. Any query on asset side of the balance sheet? No. Adjustment number 1. Just few minutes now. It's almost done. So don't leave the question right now. Stay with me. A piece of land has been sold out in 2010-11 and the profit on the sale has been credited to capital reserve account. Profit on the sale has been credited to capital reserve. Can you see in capital reserve you have a balance of 20,000? So what entry they have passed? They must have passed land account debit to capital reserve separately if they have to pass. That is 20,000, capital reserve 20,000. If the question says capital reserve, you take capital reserve. No argument on why capital reserve. It is given. It is given. So that is to be taken. So entry was land account debit 20,000 to capital reserve 20,000. So I go to land and building account to capital reserve 20,000. Capital reserve account credit side by land and building account working note 4 credit side by land and building account 20,000. So this account got tallied. So working note 4 is tallying. But if you come to land and building account, it is not tallying. The balancing figure here is by bank, by cash and bank. So this reminds you of single entry system. Yes, this will help you to find out the missing figure. So missing figure this time is by bank, sale, and this is equal to 50,000. This is equal to 50,000. So immediately, the moment you write by bank 50,000, immediately we will go to investing activity. Point number B, investing activity on the screen. Sale of land in bracket working note 1. If somebody wants to check how it has come later on, you can refer working note 1, 50,000. So let us see whether land account is telling. Yes, tick mark. 2 accounts we have closed. Point number 2. What is point number 2? A machine has been sold for rupees 10,000. The WDV of the machine was 12,000. The depreciation of 10,000 is charged on plant account in 2010-11. So please come to working note 2 plant account. You will see on the screen working note 2 left side by bank, write down by bank sale value 10,000 and by loss on sale, by loss on sale 12,000 was WDV and on for 10,000 rupees you have sold, so the loss must be 2,000. 12,000 was WDV, for 10,000 you have sold. 12,000 was WDV, for 10,000 you have sold. So 2,000 rupees is loss. So first I will give the effect of sale of plant. Sale of plant in investing activity. Sale of plant and machinery, 10,000. Sale of plant, investing activity, 10,000. Loss on sale of machine is debited to P&L account, is a non-cash item. So in adjustment add back, loss on sale of machine, working note 2, 2,000 rupees add back. Working note to 2,000 rupees add back. Why? Non-cash item. Why we are adding back? Non-cash item. Okay, now come back to that machine account. By depreciation they have given for the year. By depreciation for the year, 10,000 rupees. Write down credit side. By depreciation for the year, 10,000. And what we will do? This we will add back in adjustment, working operating activity adjustment, add depreciation. Why we are adding? It is a non-cash item which was debited to P&L account. So I have to add back to get the cash flow figure, 10,000 rupees. Now I will come back to plant and machinery account and see if it is tallying or not. So take the total of the credit side and minus debit side. That will give you difference on the debit side. I will also try. You will also try. All of us will try. So credit side total is 2,22,000 minus 80,000. So I am getting 1,42,000. So you will write down to bank 1,42,000 and in bracket write down purchase of plant. Balancing figure also write down if you have space. Balancing figure 1,42,000. This 1,42,000. This 1,42,000 purchase of plant we are going to write in investing activities. Very good. So write down in investing activity purchase of plant, working note 2, in bracket 1,42,000. In bracket 1,42,000. Jan is right, Chaurasia is right. This is also closed. One more adjustment number 3. Adjustment number 3 says rupees 3,000 by way of dividend is received. So bank account debit 3,000. 1,000 was out of pre-acquisition profit which was credited to investment account, to investment, which means the dividend income transferred to P&L account was 2,000. This is the entry the company have passed. We are only doing analysis. So bank account debit 3,000, come to investment activities. Under investment activity write down dividend received. Dividend received 3,000. Debit entry was bank account debit. So there is an inflow of 3,000. Then go to working note 3 investment account. To investment 1,000. So I will write here Buy bank 1000. Buy bank 1000. This also we have done, and it is credited to P&L account. So I have to remove it from P&L account. I have to remove it from P&L account. So come to operating activity adjustment less dividend income in bracket 2000. In bracket 2000. This is in bracket. Before that, all other figures were positive. So adjustment number 3 is over. Come to investment account, working note 3 investment account, and check if it is tallying or not. So credit side total is 31,000. Debit side total is 20. So write down to bank 11,000 balancing figure in bracket purchase of investment. Purchase of investment 11,000 rupees. Purchase of investment 11,000 rupees. Write down. Noted. Say yes. Now just wait a minute. There is a small problem. Hang हो गया. हो गया क्या? उल्टा हो गया. So this is back to normal. Purchase of investment. Purchase of investment in investing activity. Purchase of investment in investment activity from working note 3, 11,000 rupees in bracket. 11,000 rupees in bracket. Okay. Adjustment number 4 in your book. Adjustment number 4, an interim dividend of 20,000 and tax on interim dividend 10% was paid in 2010-11. This is interim dividend. Interim dividend is different from proposed dividend. Interim dividend is declared and paid during the year. Proposed dividend is proposed at the end of the year, paid in the subsequent year. So what I'll do, I will come back to first cash flow from operating activity. When the company has to pay interim dividend, it will debit P&L account, credit the liability for interim dividend payable and tax payable, and then they will make the payment. So this profit figure of 18,000 is after debiting interim dividend payable and tax on interim dividend payable. So add back because it is a financing activity item. So write down here add back in adjustment interim dividend amount is 20,000. Also write down add back tax on interim dividend. This will be 10% of 20,000. This is 2,000. Keep more space. I said 14 lines. You can keep little more. And the second effect of this will be in financing activity, interim dividend paid, tax on interim dividend paid will be shown in financing activity. So you will write here interim dividend paid. Now write the word paid. In bracket write 20,000 financing activity, tax on interim dividend paid, tax on interim dividend paid in bracket 2000. In bracket 2000. So second effect is over. Any query up to point number 4? Now the last point is income tax paid during the year is rupees 35,000. Entry for income tax paid. On the screen, working note 5. Provision for taxation account debit to bank 35,000. Provision for taxation account debit to bank 35,000. So the moment you write to bank, any bank entry in working note means we have to also write in cash flow statement. Income tax paid. Operating activity, point number 6 below. Point number 6, income tax paid in bracket 35,000. In bracket. Answer is not over. Come back to provision for taxation account. Is it tallying? This is not tallying. Credit side is some difference is there. Buy something 40,000. So what is that buy something? Anybody, any guesswork? Buy something. Buy what? So buy P&L account, this is the provision for the current year. This is current year's provision. Provision is different, payment is different. Sorry. So this 40,000 rupees, they have debited to P&L account. So I will add back this time. Now, why I will add back? Because this profit 18,000 rupees taken from balance sheet is after all the entries made in P&L account. So provision for taxation, add back. In adjustment, add back 40,000 rupees. In adjustment, add back 40,000 rupees. Chetan is right, Sanket is right, Tanya is right. Now the question is over. Please tell me the total here from 18,000 till provision for taxation. What is the total? That we will call operating profit before working capital changes. Operating profit before working capital changes. So please tell me the total of these points up to here. 18,000 plus 10,000 plus 50,000 plus 20,000 plus 5,000 plus 2,000 plus 10,000 minus 2,000 plus 20,000 plus 2,000 and plus 40,000. So you are getting here 1,75,000. Check the answer, 1,75,000. Anybody, operating profit before working capital changes, is it 1,75,000? 1,75,000? Start from 18,000. Tanya is right. Moonrise is right. 1,75,000. Now you add all these numbers up to this, including 1,75,000. 1,75,000 plus 22,800 plus 200 plus 6,000 minus 30,000 minus 32,000 and minus 10,000. So we are getting cash generated from operation 1,32,000 and minus income tax paid 35,000. So net cash flow from operating activity, please check, are you getting 97,000? This is the main part. This is the main calculation. 97,000. Check the calculation. 97,000 is your cash flow from operating activity. 97,000 is cash flow from operating activity. Okay, minus 35,000, you get 97,000. This way we have to present, right? Some authors, what they do, they make three working notes, one for cash flow from operating activity, one working note for investment activity, one for financing activity, and then they only write the main total on the main page. That can also be done. It's a matter of only presentation part. So now what I'll do, I will come to investing activity. Please give me the total of investing activity. 50,000 plus 10,000 minus 1,42,000 plus 3,000 and minus 11,000. So this investment activity is 90,000 negative. Check the answer. 90,000 negative. Investment activity final answer. Is it 90,000 negative? Okay, now the next task is financing activity. 1 lakh minus 50,000 minus 42,000 minus 20,000 and minus 2,000. So here I am getting 14,000 negative. 14,000 negative. Next is tell me the total. Profit on sale of land is not credited to P&L account. It is credited to capital reserve account. When it is not credited to P&L account, why we will deduct it in P&L account? I have given you the journal entry also. Land to capital reserve. It was not credited to P&L account. So if something is not credited to P&L account, why will you remove it? Purposefully that adjustment was given to confuse you. You have to also see that entry has gone into P&L account, then only you will do the adjustment. If the entry has not gone into P&L account, it has been routed through some other reserve account, no need to make adjustment. Okay. So tell me the total now. Total of A plus B plus C. So 97,000 minus 90,000 minus 14,000. So we are getting a net decrease. We are getting a net decrease 7,000 rupees. And now, important point. The total is matching. Minus 7 plus 25. Minus 7 plus 25. 18,000 total is matching. Tang, tang, tang. So this answer is telling. This answer is telling. Okay. Now any other query? Any other query? No query. Okay. Write one note. Write one note. It is assumed that it is assumed that it is assumed that last year's proposed dividend has been fully paid. It is assumed that last year's proposed dividend has been fully paid. Second note, as the profit on sale of land is not credited to P&L account, it won't be adjusted in operating activities. It won't be adjusted in operating activities. It won't be adjusted in operating activities. Third note, in the absence of information, in the absence of information, dividend on preference shares have been ignored. Dividend on preference shares have been ignored. Dividend on preference share have been ignored. Dividend on preference share have been ignored. Right? Now any query? Now any query? If you don't have a query, then this answer is over. Today's lecture is over. Bye bye. Thank you.